All right, ladies and gentlemen, morning. Welcome on a Saturday out of the great U.S. Hopefully this finds you doing well. Please let me know you can see the screen and you can hear my voice with a 1 or a yes or something. It lets me know that you are awake this morning. Good, everybody. Yeah, there we go. Thank you very much. It would be useless to do this and you not hear me, right? All right, guys. So I saw the question of is there anything today that's helpful for intraday traders? The answer to that question is yes, there is. So I'm Scott Landers. This is where to buy 3 top indicators for finding the sweet spot. Okay, I think you'll find this a very useful part of your day and the information I'm going to give you. We've got just about an hour. Standard disclaimer. I know everybody gets tired of these, but we've got to go through it. Real simple, guys. No one is representing the strategy or system they're going to do today or go over with you today is going to be indicative of any kind of future results. Whether you trade any type of security, options, equity, please remember if you're going to trade, only trade with capital you can afford to lose. Past performance is not indicative or guarantee of future success or failure. And the CFTC Rule 441, any hypothetical some of the performance results have certain limitations. Unlike actual performance records, some of the results do not represent actual trading. You get the general idea. Bottom line, guys, is no one can guarantee you anything. Anybody tells you they can, I would be leery of personally, and I've been doing this over 30 years. So glad to have you here. So some of you know about me. I put some extra time in this presentation because I wanted to give you something a little different. So there's a little bit of animation on this one, but I really went all out on this PowerPoint because I want you to get some value out of the day, and I'll make sure the presentation facilitates that as opposed to just a bunch of black and white. Class structure. Today, it's real simple, quick housekeeping, we'll move on. Focus on the core solution to your entries. Please, if you have questions, jot them down. I promise I will leave you time at the end to go over them, but for the efficiency of getting material across and not interrupting people and their train of thought as they're focused on what I'm teaching, please save them for the end. I promise I'll make time for it. And there'll be time at the end to discuss this. So this is free training on where to buy, find a sweet spot. This is how to pre-qualify trend, what patterns to focus on for your buys, the 3 top indicators for finding the buys, and which time frames you should use. All this you will get through in the next 60 minutes with me. This is me. As Jeanette said, there's my mug. So I'm 48, guys. I've been doing this since I was 13. I started out reading the Wall Street Journal. My dad got it every single day, which was pretty cool growing up as a kid. I tell this story often. My fondest memory, I guess, of the markets starting out was, if you remember getting the journal, on the upper right corner, there was always this picture, and it was always the Dow Industrials. It was never the S&P 500, which is the pros market. It was always the headline number that you guys hear in the news and the media that the average person just doesn't get it. And there was a little icon in the upper corner, like a little just picture of the Dow, and what it did that day, it's like, man, that's neat. There's got to be something there to it. I'm just too young and dumb to understand what it was. And that's where I really started. I was just amazed. I'm on the bell curve, I am the tail, literally the end tail on a visual basis with stuff like this. So charts are where it's at for me, guys, okay? Founder of TradeThirsty.com. It's been around for several years. I've been helping traders, guys, for basically since the millennium turn in 2000. Done over 30 unique courses. There's a lot more in that, but it's 30 I could easily just rattle off to you. Markets, trade stocks, options, forex, bonds. Forex I mainly focus on with the hedge fund side of people I work with. Bonds was when I was a kid, as well as stocks and options. My wheelhouse, guys, is stocks, even though I deal in the currency markets. And then there's always Bitcoin out there for everybody who's focused on that stuff. Educated individual traders, hedge funds, and brokers. I've had several stock brokers over the years, even traders contact me and saying they don't teach me anything. They don't teach me anything. How do I trade? How do I trade? And I give them, what I focus on and what I do. So areas of expertise: visual technical analysis and system design, especially for the hedge fund side of things and individuals. So guys, I'm going to need some feedback from you real quick here. Help me out with this, and then we'll really dig into some things. In the chat box, I just want you to do me a favor. Will you see what time frame trader are you? You day, swing positions, swing investor. Just type D, SWP, something PS. Just gives me a feel of it. And while you're at it, beside that, what markets do you trade? You can put an E or an O or an F or C or FX. It does. It's something that gives me just a feel of who's in here. I'm just trying to figure out, are you mostly day traders, swing trader position? If we got a mix of investors, okay, just type it in real quick if you will. And then which one best defines you? You just type this in. Are you struggling with your entries or your exits? And guys, I'm adamant about this for a reason. I have yet to find a trader, and I've worked with traders literally on every continent from all over the world for a long time. I have yet to figure out a situation where I do not find traders that struggle with either an entry and exit. You say, well, I'm great at one and bad at the other. That's what I would expect. Or if I had to look at this on a weakest link basis, you might be great at entries, but you struggle with the exits. You're not equally strong in both. No one is. Everybody has a weakest link in the chain. I'm just reminding you of that, not to be arrogant or agitating. I'm trying to tell you, if you don't admit this, you're going to not get as far in your trading or your investing as you're supposed to. Everything, guys, I teach, there's very few exceptions to this, but everything I teach pretty much has application because it's fractal in nature, whether you are literally a tick trader, if you're investing long term. You'll find that. I have, again, been in this a long time. I like things that are fractal and that can expand or contract according to the time frame you're on. Okay, this helps give me a good feel. Seems like a lot of you are struggling with the exits as well, and I'll address that. So for the next 30 seconds, I want you to focus. You can close your eyes, whatever, please don't look at your cell phone right now. Don't be texting through this. If you want to get value, I need your undivided attention. I've argued this point for years, both personally and privately with people who say, oh, I can multitask. And I'm like, yeah, no, you can't. Your brain's not designed to multitask. And I have somebody who is near and dear in my life. I mean, it's about as close as you can be in my life. And she'll say, no, I multitask great. It's like, no, you don't. And then I'll prove why. So I want you to focus on me, guys, just for a minute on this. Can you relate to the following? Buying at a high instead of a low. Struggling to find the way that consistently generates what you want to accomplish, whether it's trading or investing. Are you caught chasing runs? Something takes off, it's already up 4 or 5% on the day, you come in and buy, and the next thing you know, it's not pretty. Are you used to taking profits too soon, not cutting losers loose? These are all things that even the most seasoned professionals can make the mistake of doing. Okay? The whole idea of fear of missing out. What I would like to tell you with this, though, is it doesn't have to be this way. And in reality is, you really want to be in a situation where you don't feel an energy hitting you. You don't feel the need to press or push. You need to be the person sitting in the corner of the room watching everybody else and what they're doing, and you're completely lucid at the point. And that may sound all whatever out there to you, but trading, if you get done with the trade and you're pounding your chest like you're some stud or studette, I got news for you. This is not a healthy situation. I get we all have great trades. One of my best all-time trades early in my career, I mean super early in my career, my best all-time trades early was in about an 88% cash return on account, literally in a single trade. Just the right place at the right time during the dot-com days. And it still stands out all these years later. And I've had really good trades in my lifetime, but it was at that stage of my life, that was an impressive trade just because the way I levered. I would never train anybody in the modern world to trade that way, but that point in time, you live and you learn from your mistakes. So for the next 6 seconds, put this in your head. There's a guy named Eric Thomas that I've listened to over the years. You might know who I'm talking about. He makes a statement. He says you can't stay where you are and get to where you're trying to go. And there's a lot of truth to this. You can't stay. You can't have roots and wings, as I say, right? You can't keep doing the same thing over and over and over again, expecting a different result, as I'm sure you've heard that statement too. So I want you to start today. I want you to step now into the future. I want you to think about where you are now and where you want to be down the road. And if you're not setting a goal or a target, you may have heard all this, you may dismiss it, but it's true. I've used it successfully in my life to change things. I'm literally a living testament to it in ways that most of you have no idea. So stop making excuses. Stop telling me the market maker, the special, the DDS messed you up. Stop telling me that the market's rigged. Stop with the excuses, because nobody's listening to you. Nobody cares. Respectfully, everybody else is experiencing the same things that you're experiencing. So what you want to do is have systems that do not require you to be emotional. Well, that's not realistic, Scott. I hear it all the time. I'm like, but it is, and it's happening. I have traders that do it. Their biggest frustration is the 6 or 8 inches between their ears, as I'm always told, that gets in the way of their success. So how are you going to take control? You can take control back. Okay? Systematic approaches, using methodical structure, using repetition. That's how you obtain this. You want a procedure like a recipe on the box. You do not want to have to think where you're going to buy. It should be automatic. I've got one of my best friends in the world who started trading. A couple years ago, I went through a personal tragedy in my life, and I kind of stepped away from the markets for a little while. I had to. I was there, but I wasn't focused on it daily. And that time, one of my close friends in the world started trading and started trying to do time and sales. Okay, guys, we're in 2016 at this point. Time and sales trading is not where it's at anymore. This is not the So's Bandits of the dot-com days. For those of you who don't know what that is, it's not relevant. Wound up losing a whole bunch of cash. And it was frustrating to hear because they didn't reach out to me. They should have reached out and said, hey, stand by, or I'll give you this, or I'll help you do that. They didn't have a procedure like a recipe in a box. They were emotional, and they're still trying to dig out because they came to me way too late. I don't do darts on a dartboard blindfolded. If you know me, you know that. If you don't, prepare, because that's the way I go at things. And it works. Otherwise, hedge funds wouldn't call me. I don't solicit them. They come to me, and I don't say that with arrogance. I'm saying if you don't have something that's working, people are not coming to you for help. It's real simple. You all know that. So the next 6 minutes, what you're going to know is 3 key drivers for implementing success. We're going to talk about trend reversal based on an indicator. We're going to talk about buying the first dip, retrace, pullback to a new trend. And we're talking about the key time frames for you to focus on. When we are done, you will have discovered the 3 MAs that I'm going to show you, their buy pattern, the paired linear regression, its buy pattern, and the stochastic slow 2 time frame buy pattern. Before you dismiss the idea of moving averages, and I know all the pushback, I deal with a lot of different structures in the market. Moving averages can be used to analyze a chart correctly. They can be used to create opportunity. I have traders that have done it. I've demonstrated it live numerous times. So if you think, oh, it's just the same old, it's real simple, but it's the consistency and the methodical nature that makes a difference. The paired linear regression, I've been doing regression in some form, some fashion for about 17 years. I have found it hard to find anyone out there that seems to give me things with it that I don't already have or know. So my level of expertise in regression is pretty exhaustive if you're ever interested in stuff like that. But today we'll give you a short little sampling of that. And the stochastic slow 2 time frame, I'm a big believer in multiple time frames. Anybody that's ever seen my trainings know I use up to 12 time frames on any single chart. I'm not doing that today, but I'm trying to give you the concept of how you analyze your charts does make a difference. So this should be the result of the training for you today, is your ability to go in and look at something that makes a first retrace after a trend transition and find opportunities like this, okay, from an entry standpoint. Some results that I would like to think you would be able to achieve, and these are not cherry-picked examples. These are trying to give you a good idea of what you're looking at. There's just a few examples. It's about 30 points worth over 5 charts. And I don't like outliers. I realize Apple is, but Apple has done over 2 different trades, and you'll see a couple pictures of that coming up before we get through the session. But this is 5-minute charts and 60-minute charts. There's one of Amazon. I believe it's Amazon in the presentation that's on, I think it's a daily chart where it starts before I think it moved 150 points. Please don't hold me to that. We'll get to that picture in a little bit. But this is the kind of thing you want to be able to consistently do. So the P&L, what success, all right, so P&L, what success looks like is based on a true story. I have a trader came to me years ago. If you look on the left-hand side, while this is not their exact P&L, it represents pretty close to what it was because they don't reveal their personal information even when I have possession of it. And pretty much you get the idea when you look at the screen, it wasn't pretty. They came to me when you look at the bottom of the screen. But the typical pattern here when you look on the left-hand side, it crashed, right, on their pricing, just their structure, their whole logic, and then they, oh, okay, I got it figured out, and they come back up. And you kind of see most of how your trading charts look, right, a lot of times when you're struggling. And then you see the eventual decline. When they came to me, guys, is after this last big drop, and they were just done with it. And they were frustrated, and they said, I give up. They'd heard me in a webinar. They said, hey, look, Scott, I would be just super interested in seeing if you give me some help. If not, I'm going to quit and go back to reality. So I analyzed what they were doing. I stripped their charts down, pretty much what I called naked charting, and got them back to the bare bones. And you look on the right-hand side, and I say before and after me, that's strictly just through trying to help them become disciplined and methodical guys and having them structured. It's not me taking trades. It's not me pitching them trades. It's not me saying, hey, if you'll just buy Google at this price, you're going to make this much money. This is so I'm teaching you how to fish, okay, so that I'm not fishing for you. But I stay in contact with them. They have a small account, and the past month has been impressive. I've seen them do as much as, and again, I'm funny about putting out stats, but they had December, they did, that was last year before, 30%. And every month's not that way, so I'm not trying to pitch you on something like that. I'm trying to tell you from somebody that you can see on the left how they were struggling, and they struggled for years. This is the difference a lot of times, guys, is you just need to be willing to be consistent and disciplined. So if you're struggling, I want you to understand there's always hope for anybody in situations like this. So please know that, okay? All right, so solve the problem now, not someday. The one thing you need to solve for you right now, in order to solve that problem, we must admit there is one. Your current problem is where to buy, right? Your immediate solution is a first retrace to a newly defined trend. So Amazon, here's the question, where would you buy it? And some of you have a system, you know exactly where you would buy it. But that's the real question is, where do you buy? Well, let's figure out where we should be buying this. This is what I call the one thing that matters. In fact, if you get nothing out of the day's training, this is the one thing you should consider understanding. It's how to spot the trend pre-qualifier buy pattern without doubt. It's a foundation concept I've found to be the most productive tweak or shift for a trend pullback for a trader. It's the single concept by itself may change how you profit in the future, regardless of what level of experience you might happen to be at. And there's 3 key reasons for this. It creates consistency for what I call the buy the dip trade style, which I think you're probably all familiar with. It forces discipline, which is key, and it's measurable. Realize if you're going to do something, you can't measure it, you have nothing. You might be lucky, but you're not going to be able to sleep at night comfortably knowing these things. So here's a chart that probably looks pretty odd to you. It's like, well, where's the price? There's 3 moving averages, but where's the price? This is Apple on a weekly chart, by the way, going back from 2014, 2013, right in that level. And what do you see here? When you look at the chart, you see on the bottom left down here, right, you can kind of see where things have run up over time. And you can see where it sells off and then retraces back and sells off, right? And then a new trend starts again. What we're looking for is for something that runs up, guys. We want to run up and then runs up, and then once it sells off, right, we want to get to that first retracement like we see in late 2015 right here. So that's critical. You say, well, isn't that obvious? I would like to think it's obvious to most people, but it's not always obvious to most people. And the reason I know this is because I drill my traders constantly on this. So again, reversal of trend, you're going to need a recipe to that new trend. You got to define the new trend. Okay, so if you've been running up for 5 days and then price sells off, that's a good thing, because that's the first opportunity you're going to have. If you're still going from the bottom left to the upper right, you by definition are still in an uptrend. Most traders do not pre-qualify their trends. You know why? Because the fear of missing out. What I have learned through drilling traders is they can't accurately define a trend. Oh, come on, Scott. I would like to believe it, but I stumbled across this some years ago working with a trader, and they said, hey, you keep telling me that, you know, the bull flag works like at a 70+%. I was like, well, go look at Bukowski, the encyclopedia of all books there is on patterns, and look at what he says. And it's a high percentage. And I said, well, I keep trying, it's not working. I said, what do you mean it's not working? I mean, I've traded flag patterns for a long time. They have success if you are a pattern trader. They can work for you. And so I went through the charts. Next thing I know, they're buying a bull flag and a bear trend, and then wondering why they keep losing. And I said, okay, define the trend. So I went through 10 charts, and they failed. 6 out of 10 charts they could not accurately define. Well, Scott, that's not me. I've had some sophisticated traders that can't define trends. So I genuinely believe you better figure out what the trend is before you start trying to trade with it. It realistically should be the first thing you're trying to do. Again, relearning the proper way to identify a trend, it's not hard. There's plenty of ways to define the trend. So here's something, again, that's pretty simple to look at. If you look at the bottom of the screen here, watch the highlighter here. If I'm going to go from this bottom left part, right, I move up, move up, move up, come on, and then we go down. The first retracement is right here. You're like, well, how do you know that? There's no price. I don't need price. I have the indicator that tells me that. Pure and simple. So why do I need that? As it runs up over here and then pulls back and then takes off again, same thing. Don't complicate your trading, guys. There's no need for it. It's not going to help solve your problems. So which chart's easier for you to read? The top one or the bottom one? You can answer it in the text if you want to do that. But which one's easier to read? Your brain's trying to multitask right now, and it's struggling to do so, which is not what we want to have happen. When I do naked charting, this is one of the concepts I get into. The top has not just 3 lines. It has price, and the price has different colors, and it has relationships to the 3 lines. Your eyes right now are jumping up and down, up and down. Tell me I'm wrong, right? Looking at like, which one am I going to trade? Which one? What am I going to do? That's the way I'm talking is for to iterate the fact of how your brain's trying to interpret this right now. Almost like a stutter. It's like, wait. Why? Well, what? Never seen that done before. It gets better. We can take off the time and the price axis, and you would not know whether this is a daily chart or a tick chart when I'm done. Done it too many times. There's value there. If you want to learn to read a chart correctly, start looking at what's the first thing you're going to analyze, and then do it like a recipe. So the buy the first retrace, which is buy the dip, I once believed as you did, and then reality set in. I'd buy things that were extended early on in my career. It didn't work so well. You ever had that extended trend that had your face ripped off? You ever been chasing something like a Tillery, or I don't know, it could have been Tesla, it could have been Apple at some point. It doesn't matter, some high Momo stock, and you just can't stand it because everybody else is getting in, everybody else is making money, and you're late to the parade. You're right at the end where Santa Claus is coming down, the Macy's Day Parade. You've missed everything. But you've just got to get in it. You got to keep it the Joneses, if you will. Next thing you know, what happens? Where you bought, it's not only down, but it's down hard and quick. So you want to hire probably a pattern you can focus on. So once revealing trends shift, look for retrace or dip and establish an entry point. And this is how this looks, guys. When you're looking at this chart, so we run up on the left on Apple Weekly. We sell off. My indicators are now have transitioned where the green below the yellow below the red. That's the first retrace to the dip in the trend. That's where I'm looking for my entry. I'm pre-qualifying. I'm going to reiterate this. I don't care what indicators I'm looking at today. I don't care what indicators you use. You want to have gone through either an uptrend or a downtrend. You want it to come to an end. This is that first pullback. As simple as this is, if you just did this versus what many people I know do, your success would go up and your statistics would prove it over time. The only difference between these two charts is one has price bars, the other one does not. It is to help you see this thing clearly. This is two sets of regression lines. If there's questions on this at the end as far as the settings, I'll go back through them. But on the left-hand side versus the right-hand side, this is Goldman Sachs. This is on a 60-minute chart for those of you who like to swing trade. Okay? The one on the left is a 23 regression curve with open and close. That's the green and the red. The blue and the red is a 46, open and close. So you're putting those indicators in, at least in TradeStation, there 4 times. Okay? What I want is the green to lead the blue and vice versa. So when you look on the right-hand side, it's real simple. We run up, we pull back, and we retrace. I want the green below the red, I want the blue below the red, and I want the green and the red below the blue and red. It's 4 things simple stacked up. This is carving a top. I teach an advanced concept on this just to put it in context for you, but I'm giving you a short version of this right now. Sells off. Watch it run back up. Watch the indicators come together. You're basically in buy as this thing pulls back and takes off again. You'll see another transition short. You'll see another transition long. It's not complicated. I don't mind if someone wants to buy extended, but what happens with extended is your risk reward, guys, shifts radically fast if you use risk reward. The question is, when you're going into an entry, what's the expected upside? How far up do you think it's going to go? Do you actually know? You should be able to write down every trade, whether you day trade, scalp, swing trade, invest, of where you're getting in, where you're getting out, and where you estimate it should go to. So do the time frames seriously matter? I mean, do the key time frames really matter at the end of the day? I would say that they're more important than most people give them credit for. Time is a critical concept overlooked by most of the pros. Have you ever found yourself using a time stop? If you were to call most trading desks, I think you would find it difficult to find many pros that say, hey, Goldman Sachs long at XYZ price. If I'm not filled within 30 minutes, pull the order. Most people say they do this, but they don't. And when you do the research, you find out most people don't. Please do not jump around. Stay focused on one time frame that creates consistency. My first dealing with the hedge fund when I was recruited to come work for one of them or consult with one of them was I set up 10 monitors, 10 charts, all the same time frame. And the reason I did that, guys, was to make it real simple. I wanted to be focused. I didn't want distractions. And it paid off nicely, developed a solid system for me using 60-minute time frames. And I was able to sit there and walk them through how to be focused, be able to accumulate the positions they want to accumulate, the size they want to accumulate based off that logic. If you'll standardize your time frames, it will make a huge difference for your trading. It'll keep you from chasing what's hot now. Typical key time frames, the 1 and 5 minute charts. Okay, for the day traders, 60-minute charts for the daily type swing traders. Position swing traders, you want to do 60-minute charts with daily and weekly. Okay, that way it gives you something to start looking at for a level to enter into, but you really want the higher time frames to carry you. Okay. One question I always give about day traders is, can I use a tick chart? Absolutely, but you need to be in the lower time frames. You're in this thing for a snippet of time. You're in them for minutes, maybe half a day. It's plenty of information. The investors, obviously daily, weekly, monthly, and yes, I did say monthly. There's value in the monthly charts if you'll just spend the time to look at them. You don't have to go overboard with them, but you'd like to balance it out, because if you're an investor, by definition, you're in a trade for over a year. Typical analysis of 3 moving averages right here. So I just show basically a setup for where you might look to enter something like this, where you have a rising trend line, right, and it breaks down. What I'm showing you here is basically a situation where the green below the yellow red for the moving averages. This is a 4918 setup on the EMAs. And basically it breaks down right here. You get short. And it shows a couple scales. I need that transition. right? I'm finishing this trade, letting it finish itself out, and then I'm looking for another entry. And on the right-hand side, you'll see the approximate points that were able to be seen here, okay? When you start looking for opportunities, okay, find that first transition. There's one right over here where something rolls up into it right here, pulls back and tries to take off. It's a short-lived trade, but at least I'm consistent. And most people say, well, it's moving average. I'm not really impressed with them. That's okay. 60-minute swing trade. What was preceding the up move? This downtrend. What happens after that? Gap up, pulls over, retraces in the stack slope moving averages, takes off, and then there's your exit right there. Simple analysis of a swing short for Apple. This is about an 8-point short as I recall, right? Sells off, first retrace, and then falls apart using some logic. If you look left, you'll kind of figure out where it was trying to go to. This is regression 101, right? You'll see the transition of the regression curve lines set up, retrace into it, and then sell off. This is a quick, this is on a 5-minute chart. It's not supposed to be a really long-term chart in this particular example. It's not going to get you $5 on this particular, because I'm on a 5-minute chart. It could. And then there's $1.10 long right here where you have everything set up, run up above, pull back, retrace the regression curve, and then take off. And again, it exits over here. Stochastics. I love multiple time frame concepts. Okay, I could spend hours with you on this. But what this is a stochastic slow in 2 time frames. Okay, the settings are 14:33 and it's set to 20 and 80. Now what I've done is I've taken a 5-minute time frame with a 60-minute time frame here. And what I'm looking for, guys, is look at the slower moving stochastic. See how it's in gear? Okay, watch the faster pull back into the new trend. So this is like a trend and trigger concept. I've ran up, pulled back, found support, if you will. I found the new trend, right? That's a low, right? A dip in the trend, and I want to take it higher. And this works on all time frames. Everything I teach, guys, is fractal in nature. Keep that in your head. So this works quite well. It's something most you can set up on most of your platforms that are out there. Okay, not difficult. Don't make it difficult. Keep your trading simple. Take you far. This is X U.S. Steel, and again, you can see on the far left-hand side where you have the end of one trend. You'll see the blue go below the red on that 60-minute time frame. Sorry, it's not a daily of 60 on this one. Yeah, this is the daily of 60, not a 5-minute on this one. And you'll see it run up, hit, right? Because it's overbought or oversold, depending on which side you want to look at it from. This is overbought right here, setting up and runs down. This is a nice short in this particular case. And then we're going to go look down to the right, and what do you see? You see the end of that 60-minute trend and a new one starting to set up. This is simple. It's just basic stochastics and a basic understanding of it. And again, here's that exact buy all over again right here showing up where I've gone to a new trend. That blue goes below the red. I have gotten oversold. I want my indicators to get oversold or overbought, guys. I want the trends to get to an extreme. I want to get the tail of the bell curve. I want things to come back. I want there to be a reason for people who are short to want to get long, and those who are long to feel the need to take profit so that you can short them if that's what you decide to do. This is Morgan Stanley. Again, what do we see here? We see the end. This is on a 5-minute chart. You see the end of the regression curve, sell off, sell off, sell off, right? Where do I get the green and the red and the blue and the red to line up? It's not hard visually to see this. Runs up, pulls back, and then start looking at your long. Guys, this is real simple concepts. This is Amazon. This is the one, if I remember correctly, is about 115 or 150 points long on that I looked at on a lot, not on the 60, but the concept of where you can get in on a daily type move, and not from this date necessarily, but I'm trying to put in perspective for you. There's one I looked at that was the exact same type scenario and setup. For those of you who really want to play options or leverage them, you've got to let the trends in. This one moves up, pulls back, finds support, breaks out. I love to use price bars as entry points, guys, because they're methodical. They're distinguished. They're distinctions you can see. Amazon, another 60-minute chart. Again, you see the green, red, blue, red set up. This is, again, 23 periods open and closes. right? 23 green, 23 red. The blues above are 46 open close with blue and red. Runs down, retraces back, sells off. It's a small little trade. It's not a big trade. It generates points, but you never know how far they're going to go. So some quick notes. Stock initiates a new trend. Allow it to please pull back. Okay? In other words, we've been running up for 9 years. Market rolls over like recently, right? Let them retrace. That retrace is that first opportunity. Everybody fears the retrace. Why? Well, I want some guarantee. Well, if it was so guaranteed, then why are we listening to me right now? You might be here because you're trying to get more advanced information. That's great. But if you're struggling, find the first retrace to a strong trend. I'm telling you, it will make all the difference. I have statistics I've generated through analysis with a quant that, again, make the logic stand out. I mean, even for me personally, I was like, wow, you're talking a 25 to 30% improvement over what you've been doing on your returns. It adds up, guys. So again, stock initiate a new trend, allow it to pull back. Strong gap that shifts the trend, allow it to dip. We have a big gap down, a big gap up. Allow the trend to shift. Quit trying to chase. The specialists know what's going on. They know how they know how to suck you in. They know how to play with your mind. Once it gets the dip, buy it. It will retrace. Maybe not the level you'd like, but if you don't see what you want on your chart, quit forcing trades. Just move on. There's more fish in the sea. Become a trapper or a stalker. Stop trading because it has a pulse or you'll go broke. And I have friends of mine that have proved this, sadly, that I've witnessed because they refuse to sit there and wait on the ideal trade to set up. And I don't mean ideal that the markets are perfect. It's got to fit something close to your recipe. If it doesn't look like something you want to trade, then move on. Again, define your systematic trade like a procedure or recipe. It'll take you much further than throwing darts. So as promised and delivered, minus the PowerPoint glitch earlier on the where to buy concept. Recipe to a new trend. I cannot beat this in your skulls any harder than I am right now. I really can't. It's a big deal. You've got to have what I call a multi-period trend. Well, what in the world does that mean, Scott? Well, it's not that hard to figure out. What do you mean, Scott? So if you have 2 bars and you're going to define that as a trend, it's probably not a trend. You want something that looks like it made higher lows and higher highs. I watch traders all the time try to trade the soup or the chop, and I'm like, stop. Did it move up? Did it go from 50 to 55? Did it go from, 67.30 as a day trader to 67.90? Does it look like it actually had a trend? You're all intelligent people or you wouldn't be here. Make it define a trend. Make it show itself. Then let it sell off. Let it retrace. Make it take out a swing low. Whatever it takes for you to identify this. If you would do this one thing, as emphatic as I am, because I watch traders come in all the time. We see what I traded. It didn't work. You know why it didn't work? Because you didn't wait for a transition. You didn't have any logic. You didn't have a recipe. The reason I have success helping traders privately when I mentor them, the only reason is because I'm going to go and look at what they're doing and saying and asking them the hard questions. The same things you could do to yourself. Talked about what patterns to focus on for your buys. It's the dip, retrace, or pullback. It's basically all the same to a new trend indicator. I've gone through the 3 of those. The concept of the first retrace works on a variety of indicators. You don't have to stick with these 3 concepts. Let me do moving averages. If you've never played with regression, I would suggest you spend some time. It's quite powerful. So there are 3 exponential moving averages we talked about, being stacked and slope, price above it, right? Talked about the 23-46 period open and closing the regression curve line stacked and slope, which is available pretty much on most anybody's platform. And then the stochastic slow with 2 time frames using just standard settings they come set with. You can play with those if you want to, but if you can't tell, all 3 of those are multiple time frame analysis because I'm using 3 different speeds. I'm just putting it on one chart. So the time frames you should just focus on, again, day traders, the 1, 5, even a tick chart depends on who you are and what you're trading. If you're trading currencies, swing trader, 60-minute chart or daily, Position swing, 60-minute chart, daily or weekly. It depends on what your expectations are and what you're trying to do with it. And investors, daily, weekly, monthly. And again, I emphasize I would look at monthlies. There's value there, even though most people won't look at them. So I'm going to throw you a quick bonus pattern that doesn't require an indicator. And this is for people who realistically want to day trade or potentially swing trade. It's called the opening range excessive gap. There's no indicators, it's price. Condition is you get a price pattern where stock gaps excessively up or down, but it's gapping into a prior defined trend. You do it on a tick chart, a 1 to 5 minute chart. And all you're trying to do, guys, is look at a break of a higher low of the opening range bar, that first 1 or 5 minute bar. You would trade back in the direction of the prevailing trend. And again, there's a concept I call trade management through tipping point. You may know this stock. You've been trading any time this past few months or past couple of years, Tillery. And this is one that I actually recorded in real time the analysis of. But what you can see is the 1 minute bar sets up. It's about 101. And you can see that this is excessive gap. You've gone from 120 down to 98. It goes back in the prevailing afternoon trend right there. It pulls it right back up. When you have strong defined trends, guys, and they gap hard below or above, depending on which direction you're going in, be amazed at what happens when they pull back. I didn't cherry pick this. This is one I was actually dealing with and had time to actually record in real time. So how do I take profits? This is a question I get asked quite often. So I gave you the 3 entry concepts. So let me serve you today with a solution taking profits in a logical and structured way, right? So we can remove the emotions from where things are and when you want to take profits. We can take this concept, right, and reduce the stress and hopefully create some freedom through simplicity and structure for you guys today. So remember when I asked you this morning, early in the beginning of the session, I said which one best defines you? Struggles with the entries or the exits? All right, a lot of you said exits. Some of you said entries. Well, I've given you 3 ways today to get your entries done. Now, let's come up with a solution for your profits, your slash exits for taking profits. You can do this with the concept I call tipping point. That didn't work so well. Why? Sorry about that, guys, but for some reason the PowerPoint's not behaving. So the tipping point course is not based on moving averages, stochastics, regression, or bands. It's based on simple logic, it's price-based, it's structured, it's semi-mechanical in nature, it's common on most platforms, it's so simple, you know, the whole idea of a caveman can do it. It's focused around simple trade management concepts. It's very easy to grasp and understand. What I want to do is create a course that would allow traders to get comfortable staying in trades longer using their current indicators. So you can use what you have, but this is a trade management tool. It caters for day trading, swing trading, investors, pretty much simple logic to follow. So a tipping point course, which you're going to wind up getting, is a concept that's designed to help you manage trail scales and exits. That's logical, simple to execute. You can literally start using it the next trading session that opens. So along with offering you the course, guys, I'm giving you 2 follow-up classes to better serve you so you can review charts with me, get a feel how it works, answer questions you can have. Gives you a chance to get further into mastery of it, right? And there's the dates and times we're looking to do. That's 11/6, 11/7. And then I'm throwing in 2 hours of charting diagnostics so you can learn how to analyze charts at a much deeper level, right? Learn about why divergences actually matter in the major averages and how they impact what you're doing, especially for those who are day trading or swing trading. It doesn't matter what market you're in. And you can get some new insights from somebody who has experience. So one other thing I did, talked about Tillery. I actually recorded Tillery in time. It's 40 minutes of live discussion of me and what I'm thinking and seeing. This is the thing I get requested the most to do with traders. It's live analysis in real time. I just got lucky enough to record this. There's no way I could have set this trade up any better. It just worked out really well as far as the ability to follow it. So as you can see, guys, you're getting a lot of value packed into a simple course. My idea was that intentions are to support you as a trader and give you the best map to go on your journey. I'm a big believer that trading is a journey, it's not a destination. So tipping point concept course alone is $497 normally. At the follow-up classes, the two are usually $500 for the pair, and the diagnostics class the same way. So it's about a $1,500 package deal. First 25 of you that sign up, you get it for $197. Okay, $197 is what you get it for, as opposed to the $1,500. If you click on the link, this will take you to. You just fill out your name, address, phone number, put your information in. These were the examples I showed earlier. All the pictures you've kind of seen, that's where these came from, these results. Okay, just to give you an idea. So 15-point swing, right? In Apple, it's number 2. You got 7 points over here, and then you've got 8 points there. Again, this gives you a feel of what you're looking at between a way to take exits as well as to do your entries. Okay, so with that, I know we've had some technical glitches today, so I definitely, if you've got questions, I want to do my best to answer them real quick, assuming everything will behave for me. Bear with me 1 second, guys. Computer's just acted up today because of, really don't know all the reasons, but it's beside the point right now. Let's see if I can answer you guys' questions.
I'm right here if you need some help finding them.
If you'll just post your screen for a minute, just so I can get to questions on this. I'm going to have to get out of the PowerPoint again. It's giving me difficulties. I'm sorry, Jeanette.
No, that's fine. I just leave it up and I'll ask you the questions that I see. How about that?
Okay, that'll work. That'd be great.
Just leave it right where it is. Okay. All right. Let me back up real quick. And we've got time because our next speaker's running a little bit behind, so we're good. All right. What about tick charts? Do you use tick charts?
Yes. Not the biggest proponent of tick charts, but it depends on what instrument you're trading and what time frame you're trading. I say time frame. If I get traders who try to trade like E-minis, I get people who try to trade especially currency with ticks. And again, it depends on your structure. But the concepts that I'm going through, it doesn't matter what time frame, tick chart otherwise, they all work, whether it's the entries or whether it's the taking the profit.
Okay, all right. Were you sharing EMAs or SMAs?
EMAs.
EMAs. Okay, all right. What's the time frame of the stochastic you were showing earlier?
They were 5-minute charts, and they were 5s and 60s on that.
Okay.
And the settings were listed as well at the 14, 3, and 3, I believe.
Okay. All right. Can you put these studies on TOS?
Yes. There's no reason that you shouldn't be able to do these on TOS at all. Everything that I do, whether it's tipping point or what you've seen today, is all common available on pretty much every major platform. If you don't have one of these, I would be concerned for you as a trader investor what you're using. So much of this stuff's free on the internet now. We're just the most generic platform. So yes, on TOS you should be fine. Ninja, anybody like that.
Right. Okay. All right. Does the course include, Harmeet's asking, does the course include settings and regression indicators?
No, because it is not based off of regression. It's not based off EMAs. It's not based off bands. It is based off a simple price structure that even if you didn't have the tipping point indicator concept, which is, like I said, widely available on almost every major platform I can think of, you could still manually calculate if you had to.
Okay. All right. Can you explain the time frame for the moving averages and the linear regression? John is asking.
Yes. As far as the specific time frames that were shown?
Yes.
Okay. I showed examples between 5s and 60 minutes on both those, but you can use it on daily, weekly, monthly, or tick chart. So realistically, all I'm trying to do, guys, is just look for that first retracement beginning of a new trend. And I just need the indicators to shift. I need to go from one trend and flip it over the other and then find that retracement.
Okay. Do you have a trade room or just educational classes?
At this point, just educational classes.
Okay. Can you, let's see, you're 15 seconds. You probably can't. If you're day trading using 2-minute and 5-minute, what 2 slow stochastic times do you put on your charts?
I would put, they said 2 and 5 minute.
Yeah.
I would replicate the 2 and the 5 on that chart. Again, the concept of trend and trigger, guys. Your long term is your trend. Your trigger is your short term. So please replicate whatever you're used to using. Do the same thing. Do the 2 and the 5, use stochastics, and you'll be happy.
All right, great. All right. Thank you so much, Scott, for being here with us this morning. That was the last question. I'm going to post his link for y'all in the chat box. It's TradeThirsty.com/plan, and great feedback so far from your presentation. So I'm sure we'll have you back again, Scott. You have a great rest of the day, okay?
Thank you, guys. Bye-bye.